Hey everyone! Today I want to walk you through a real-world example of how someone took a personal market thesis and turned it into an automated strategy that's actually outperformed traditional buy and hold by a significant margin. This strategy here is called TQQQ for the long term. It was built by a composer power user named Derek Nielsen. It was originally shared on Reddit and was later adopted and evolved by the composer community. It's a great example of how hypothesis-driven trading can be both powerful and accessible. So the core of this strategy is built around two ideas, and that first idea is that of mean reversion. When assets get too extended, either overbought or oversold, they can often snap back to their average. The strategy will look for these moments using the 10-day relative strength index. Here's an example of one of those instances right here. When it's trading above the 200-day moving average, when SPY is, and it becomes overbought, as shown here, then it'll exit the TQQQ that it typically holds in that period, and it will go into UVXY, which is a volatility ETF. When it's trading below the 200-day moving average, and when the RSI drops below 31, that indicates oversold conditions, so it'll switch back into TECL for the rebound, which is bull on technology. Another thing that this strategy does is momentum switching. The strategy uses the 200-day simple moving average of the S&P 500 to determine whether we're in a bullish environment, as shown here, or a bearish environment, shown in this logic here. So if the S&P 500 is above the 200-day simple moving average, it's mostly going to stay long and go into TQQQ. If it drops below that line, it'll flip into a bear market playbook, and depending on the market conditions at the time, it could short the market with SQQQ here, or move into bonds, as shown as with TLT, depending on which RSI of those two is better here. So why is this so effective? It's because it's going long in bull trends, it's rotating defensively in sideways markets, it's generally shorting or moving into volatility in bonds and downturns, but it can catch upswings as well in those periods. And it automatically takes profits and manages re-entry based on objective signals and using no emotions at all. This is how individuals can compete, by applying structured logic and letting automation do the heavy lifting for you. So this strategy here, since its creation in June 2022, has returned over 400% with an annualized return of 82%. So basically, you don't need to be a quant to think like one. And this is the kind of stuff that a composer enables. It's the ability to test ideas, build conviction, and automate the execution without relying on guesswork or emotional trading. Whether your edge comes from a macro view, technical indicators, or just being early to a trend, Composer will give you the tools to bring that edge to life. And here's some more statistics you get about your strategies that you're going to build. So you get cumulative return, annualized return. There's a bunch of statistics you can explore here, and you can also see different things that your algorithm has held each day. Now I'm going to show you how to build a simplified version of this strategy inside the Composer platform. You don't need to write a single line of code. You just stack your logic step by step using the visual building blocks that we have. So I'm going to go over to the Create tab here and click New Symphony. And the first thing that we're going to want to do here is define the macro regime that the algorithm will define its logic blocks in. So we'll add a block, we'll make an if-else statement here, and what we are going to do, for example, is check if the S&P 500 is above its current 200-day simple moving average. So let's click this pencil icon here, and let's check if the current price of the S&P 500, we'll do the SPY ETF, is greater than the moving average of return, the 200-day of the S&P 500. So if the current price is greater than the 200-day, it'll have this logic, otherwise that's going to be our bear logic over there. But this is not the only way to make a strategy. You can have any outer if statements that you want, or any logic. So step 2 is we're going to complete our bull market logic here. So if we're in a bull regime, just buy and hold TQQQ. So I'll add a block here, click on the assets, and add TQQQ. Awesome. So now we will go into our bear logic here. So I will grab another if-else block here and check if the current price of TQQQ is greater than the moving average of price. Let's stick with the 20 days of itself. So what we're hoping to do here is catch upswings even in bear markets. So I'll add a block and we will filter and we will sort by the RSI, relative strength index, but there's a bunch of different indicators you can sort by as well. Let's do 10-day window and we'll select the top one with the highest RSI. Oh, sorry, this was supposed to be bear logic, so I will switch that to less than. So this sort block will be in our less than, so if there's a downtrend. So we will look at SQQQ, treasury bonds as well. In this else statement here, we are going to add another if statement here and check if, let's do RSI 10-day of, let's do TQQQ again, is less than 31% fixed value. So if it's gone down a lot lately, we will buy SQQQ, so we will keep going down and buy TQQQ. You can see how our strategy has performed since 2010 in this graph, and you can scroll down and see more performance metrics, and you can see every day what it was allocated in a table or graph view. As we can see here, this is in TQQQ every day, which probably means we made a mistake in our logic. Let's scroll up to see what we can find. So we made a mistake here. Instead of 200-day moving average of price, we said 200-day average of return. So let's set that to the 200 moving average of price of SPY. You can save that, and then see if our corrected logic boosts our return. This should be the 200-day. And we'll run that, and we can see our returns have boosted up to 40%. And when we go to our graph, we can see much more varied ticker symbols that we are holding, and in the chart as well. I hope you enjoyed this tutorial, and we will be here to answer any more questions you may have.